Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into applied Optoelectronics proxy statement, and trust me, it's got more twists than a soap opera. Get ready for a wild ride because someone is trying to get some amendment approved and a lot of shares may be on the move. Scrolling into states come at stats, the securities and exchange. Come and scroll, this is a proxy statement, meaning the company wants your vote on some important decisions. Think of it as a corporate popularity contest, but with real money on the line. They are asking you to vote on who should be on the board of directors, who their accountant should be, and a few changes they want to make to how the company is run. First, the annual meeting. It's happening on a yet to be determined date in 2025 at their office in Sugar Land, Texas. But if you can't make it in person, don't worry, you can still vote by proxy, meaning you let someone else vote on your behalf. Now, who gets to vote? Only the shareholders who own stock on April 17, 2025. Each share gets one vote on each issue. But getting something approved requires different things. To get the directors elected, it just takes the most votes. For pretty much everything else, it needs more than half the votes, but there's one amendment which needs a whopping 66 23% of the outstanding shares to say yes. The board is encouraging you to vote for the people they want as directors, for the accounting firm and for the other proposals. Let's talk about corporate governance, which is just a fancy way of saying how the company is run. The board has decided that almost all of the directors other than the CEO are independent. This is supposed to mean they aren't too cozy with the company's management and can make unbiased decisions. They even have a lead independent director. This person serves as a go-between between the independent directors, the full board, and the management. The board has a few committees such as the audit committee that makes sure the books are in order, held 5 meetings during the last year. The compensation committee that decides how much the executives get paid, held 6 meetings. And finally, the nominating and corporate governance committee that finds qualified people for the board only held 1 meeting. Speaking of the audit committee, the company is asking you to approve Grant Thornton as their accounting firm. It cost Applied Optoelectronics $158 million in 2024. The company's executive officers are Chishang Thompson Lin, who is the big boss as the president and CEO. You have Stephen Murray, the chief financial officer, and others like Hung Lan Chang, Xu Huaye, and David Kwa filling important senior roles. Now for the juicy part, how much do the executives make? Here's where things get interesting. In 2024, the compensation committee set things up so a large percentage of the CEO's money is performance-based. In other words, if the company does well, he does well, likewise for the other executives. It is important to point out that 50% of CEO and other NEO's long-term compensation is tied to preset 3-year goals. Those metrics are tied to things like non-GAAP EBITDA, a measure of profit which had a target that was not met, and new customer orders which was exceeded. The point of all of this is to keep management focused on making the company profitable and successful. Let's see how this all worked out in practice. Looking at the summary compensation table, we can see that CEO Shishang Len made 6090 Shang Len made $690 of stock awards and got a bonus of $394,656, bringing his total to around $3.7 million. That may seem like a lot, but it is very in line for a company of this size. Also, executives have to follow an insider trading policy. They can't bet against their own stock, and if they mess up the financials, they might have to give back some of their pay thanks to something called a clawback policy. The Scropoxal no for Kiats to consider and vote on the amendment of our certificate scroll. Now we get to the big changes they want to make. The first one is about changing the rules for how they can change the rules. Basically, they want to make it easier to increase the number of shares or do a reverse stock split in the future. This proposal only needs a majority of votes cast rather than 66% of all outstanding shares, which is a high bar. If they get this rule change approved, it will make it much easier to get the next thing approved King Scroposal into 5 Top and Cinder and vote on the amendment of our certificate, so to basically create more shares of stock. Right now they are authorized to issue 80 million shares and they want to increase that to 100, increase that to 1, increase that to 100, increase that to 100, increase that to 120 million. They say it is for flexibility. This includes offering more stock options to employees and the potential to raise cash. If they don't get the first rule change through, they need to get 66% of all outstanding shares to approve it. But if they do get the first rule change, a simple majority of votes cast will be sufficient. creating these extra shares doesn't automatically hurt the stock, but gives them the option to do it in the future. If they create shares, it can dilute your ownership and cause the stock to drop. But it is true they have been using up a lot of shares recently. They already used 91.4% of their authorized shares. If they are planning to acquire another company, it may be difficult to complete without the additional shares. Finally, the company states that there have been no shady business deals between the company and the executives that need to be disclosed. Now, let's put on our Warren Buffett hats and analyze what's really going on here. Applied Optoelectronics is in a tough spot. They need to keep their employees happy with stock options, but they also need to raise cash. Making it easier to create more shares gives them the freedom to do these things, but it could also hurt existing investors. In my opinion, the board is looking out for the company's future growth, but it's up to you to decide if you trust them to use this power responsibly. Weigh the potential benefits against the risk of dilution. Read those proposals carefully and make your voice heard. That's it for this episode of Corporate Decoder. Thanks for tuning in. If you found this breakdown helpful, don't forget to hit that like button, leave a comment with your thoughts, and subscribe for more deep dives into the world of corporate filings.